Hello and welcome to Nugin Forex Trader. In this video, I'm going to show you how to identify and trade using a CRT or the candle range theory. Actually, candle range theory is one of my favorite trading strategies that I used to trade. But today I'm going to reveal it to you. I'm going to start with the bullish trend. I'll show you how to identify the bullish trend, how to identify the bullish candle range theory, and how to take the trade on the bullish trend, and then how to identify the bearish CRT and how to take the trade on the CRT on the bearish candle range theory. And then I will give you two examples. I will show you another two examples for bullish and then for bearish as well. Before we continue into our lesson, please don't forget to subscribe and like so that I can produce more of this content. Thank you. Alright, now we're gonna start off the bullish market. We're gonna draw some range of candles up. Okay, this is our candle. Next candle. Alright, now I'm gonna draw the wick. Alright, okay, these are the wicks and these are the candle. This is the bullish market. Okay, Mia, what do you see? Okay, you look at this candle here. This candle here, it has opened here, it went up, but the next candle, it started here, it went up and it pulled back. But you look, this candle has formed a big gap in here. This is a gap which this candle has formed. So this is the fair value gap. This one has formed. So now this candle is closed. Wick has gone up and it has closed here. We expect the next candle to come and fill this gap. Okay. The other thing is, when you look on the left side, on this side, there will be some range of candles coming down this way, and then it will be going up like this. So when you look at this side, this candle indicates that it has one of the PRAs on this side, maybe a value gap or the block or a liquidity. It must have been on this side. That's why it couldn't go up any further, but it's now on the downward side. It means that it is coming up because on this side it has already filled up what it went for. So now we are expecting the price to retrace back on the downside. So we will mark out our highs and lows for this side now. Alright, first you mark the high of this one, and then you mark the body of this one, or the closing of this one. Closing. Then you go to the previous candle, you mark the high and you mark the low of this one. Okay, now our next candle will be like this. It will start off at the closing of the previous wick candle. It will start off here, it will go up, it will go up, it will go up, and then it will retrace back, and then it will come down like this gap in here. So we'll change this one to red. And then we'll change our wick to red too. Alright, the market went up. It went up to the IO to take out the liquidity of this candle here. It took out the liquidity of this side, and then it retraces back and took out the downside liquidity or close below the opening of this candle, it filled the wick, the value gap of this candle here, and then it retraces back. This is the CRT on the buy side. Now we go to the CRT, or the candle range theory, on the sell side. Alright, now we'll clean this ones off. We'll clean this and we'll identify the CRT for the bearish market. Okay, we'll draw some range of candles trending down. Okay, now we're gonna draw the wicks of this candle. Okay, now what do you identify here? Okay, from our candle, bearish candle, we identify that there is a fair value gap in here. There is a big fair value gap in here. The candle that this candle's wick didn't close this one. The candle continue up, but on this side, the candle continued down to fill the previous highs and lows, or to take out the other block, or the value gap of this side. So that is why the wick went down, but then it did not went further down, because there is nothing else to fill in here. That's why it traveled back up and formed this wick. So now we are expecting the market to trend upwards. That is why it went up, it formed this wick. So now we're gonna identify, we're gonna draw the highs and lows of this candle. This is the eye of this candle, and this is the wick, the closing of this candle here. This is the eye of this candle, and this is the low of this candle. So our target will be here. We expect the price to come up to take out the liquidity on this side, take out this liquidity, and then we expect the market to trend back. So we're gonna we're gonna draw it like this. Okay, the market is gonna open here. Expect the market to come up here, and then it will go down and it will fill that up. So we'll change this one to green, because now it's going back bullish. And then our wicks will be bullish as well. Alright, as you can see, market was on the bearish, but then it formed this wick, because on the left side, on this side, this already the fair value gap or the other block of this side, so there is no reason for the market to further down. That's why it was on the uptrend again. So we identify our CRT, that's the opening, which we expect the market to retrace back to take out this liquidity, or this high, low. The market actually it came from here, it came up, it filled this, it took out this liquidity, and then it went back up and it took out the opening of that down candle. Okay, now we will go into examples. First we'll go to the go to a bullish example, identify the CRT of a bullish candle, bullish market trend, and then later we'll go to bearish trend and identify CRT of the bearish trend. All right, now we'll look at some examples. We'll see one example from the bullish market, and later we'll go down to the bearish market. Okay, let's clean this chart first. Okay, let's identify one ear. There are lots of them. One ear. You see, all of these are CRT. So, but we'll go with this one here. Okay, let's first of all, let's mark the highs and lows of this candle here. This is the eye of this candle. As I said earlier, this week it travels up, and it travels up to the it travels up to the order block or some sort of PRAs on this side. This candle down. So this will throw up to the PDRA of this candle. So that is why the wick couldn't go any further, and then it retraces back to form the wick. So we'll mark this one here, this wick. This is the wick formed by this candle, and then we'll mark this one. That's the closing. That's the closing, and then we'll mark the closing here, and we'll mark the opening here. Okay, now our candle of interest is this one. Okay, as you can see from here, this candle here, it started here, it opened here, it went up here, took out the liquidity of this green candle, and then it went back. It did not close off with the first day's candle down. It did not close this week, but the next day's candle closed this week. You see, so this is how the CRT works. So we'll go down to 50 minutes and see how it works. Alright, here now. Okay, as you can see, this is the eye. This one is the eye of this eye of the week, or the previous candle, and this is the closing. This is the closing of the previous day, the long candle, and this is the closing of this week, and this one is the opening of the previous day's candle. So as you can see on this side, our candle started here. Our candle started here. Our candle started here, it opened here, it went up here, it came down here, it went back up, it came down here, it did not fill the opening or our target area, it did not fill, it went up again the next day, and then on the next day candle it our target. Okay, and when you look on the left side, what do you see in here? You see there is a value gap in here. That's what I said in our previous video. I said the market must have to move up to take out the order block or the value gap or the liquidity or some sort of PRA. So this is what actually happened. The market here, it went up to take out this one. Yeah, Market went up to take out the fair value gap of this side. It found the fair value gap, then it went down, and then it came and hit our target on this side. Okay, this is the bullish market, and then now we'll go down to the bearish market and see one example. All right, see one example on the bearish market. So let's clean this one up. Okay, let's go back to the daily time frame and identify one of the setups here. All right. Okay, let's look at the bearish setup. Okay. Oh, we can see lots of them here. You see this one? This is a CRT here. We can see one here, and then we can see another CRT here, another CRT setup here, another setup here. Wow. And even another setup here. You see all the CRT setups in here. Yes. You see, you can just if you can identify setup, you see how you can get all these profits in here. Okay. We'll look at one of these examples. Okay, let's clean all of them. Okay, let's do this one. This one here. Yeah. Okay, let's zoom it in and identify the highs and lows of this candle here. Yeah. All right. This is the eye of this candle. This is the wick. For the closing of this candle here, and then this is the previous day's high or low and previous day's high. So our target is this one now. We expect the market to travel up this way, up like this, and to hit this target. This is our target, the point of interest. So we will mark this upward candle because we want to see where why it moved down, or where it moved down to take what in here, because we said in our previous video that it must have to travel down to take out the liquidity of this side. If it doesn't take out the liquidity, it must have to take out a value gap or a hotel block or something of that sort. So that is why that's what I've explained in our previous video. So let's throw this one down to 15 minutes and see. Let's expand this one. Okay. All right, here now. Okay, as you can see in here, this one is the opening of the previous days, the big red candle down, and this one is the closing of that candle. This is the eye of the wick that was formed. Actually, it's up here. That's eye of the wick that was formed, and this is the closing of that candle. So our point of interest was on this side. Okay, as you can see in here, the market did not come up to fill this to take out the liquidity of this side. Actually, the market was, it started off here, it went down, it started off here, it opened here. Okay, this is what it did. It started open here, it went down, and then it here, and then it came back up, it went down, came up, and reached our target. But what happened here? Because it did not come up to fill, to take out the liquidity, what did it do in here? Okay, you look at the left side. On the left side, you can see a high fair value gap here, exactly here. Here, you see this. This is where the market came to fill. This one here. You see, this one. This side here. It started to it down. It came back to fill the high value gap on this side, and then it continued down. And then it went down, and it went and closed in on our point of interest in here. Okay, this is how the CRT work. The CRT, the bullish and the bearish, and actually to master this strategy, and if you identify the CRT properly, you will be profitable with your trading. With that, thank you all for being with me. Thank you for watching, and please don't forget to like and subscribe. See you all in the next tutorial or next lesson. Thank you.